All right. Thank you so much for again joining in for today. This is Samuel Ibanda of Achievers Professional Trainers. We are continuing with our last study on short-term decision making. And in the previous class, we looked at the buy or make decision. We also looked at the short-term. We looked at special price and so on. So here we're getting down into details and trying to see how we can relate our understanding of each of these short-term decisions. So we want to start from deletion. We want to start from this one, the one of deletion or dropping of a product line or shutdown decision. Now, before we get down into this, one of the things that you have to know is that continuously businesses that have, let's say, divisions or that are dealing in different products are interfaced with challenges of having one product not being profitable and maybe the rest of products being profitable. And one of the reasons why, of course, businesses spread this kind of risk, or why they have different divisions, or why they deal in different products, is because they are looking at what's to maybe trying to look at spreading risk, but as well as they have different reasons. With this part, I usually use an example of Coca-Cola. We know very well that Coca-Cola as a brand, especially for Uganda here, is that they are dealing in several kind of products. I think right now they now have an arm of water. Previously, even before they took on Renzoli, they had Azul, I think, if I'm not mistaken, as their brand of water. I don't know if that has been dropped right now. They also have different kind of brands when it comes to their soda. They have, I think the Crest, maybe Crest is theirs, maybe Sprite. They have Stony and so on. Now, just like a company like Coca-Cola, there comes a point in time where a company has to make a decision on either to continue with the production of a brand like maybe Crest, or actually shut down that line, maybe because of demand. Now, the reason, of course, the most common reasons why they shut down a given line is because maybe that line, when you look at the profit that is coming from that line, it's negative. It's basically a loss. So in that case, you find that businesses will go ahead to maybe shut down such a kind of arm. Now, before a business shuts off some of the arm, one of the things that we'll really get down to understand, especially as we go through this, is the fact that today you may be close that arm based on the profit being negative, but that arm is already helping us to cover some of the fixed costs. You get it? I think we just saw it when we were looking at the buy or make decision, where if we make a decision to go and buy, then we would have underutilized capacity and we still incur fixed costs that relate to that kind of production. So it's the same thing also here. Once you make a decision to go and maybe drop or discontinue one of your production line, you have to think through some of the decisions around here. Now, one of the things that also, companies can have a single product that is actually maybe making losses, maybe because of the current situation. You get it? For example, if we're in the lockdown and maybe one of your products is dependent to people being together, maybe it's a party-related item, you cannot discontinue it because it's giving you a negative profit. Because at the end of the day, you may situations may come back and this product may be lucrative to help you and your business grow much better. So it's important for us to have that in mind. And of course, the other thing also to basically look at is that sometimes companies have what we call strategic products, or products that launch them into the market, or products that they are known for. So such products, because it was their strategic product, they once they let it go, it means even the demand of the other products will be affected. You get it? Some products are complementary to the other. And that's why you see, even when you make a decision, shut down one maybe brand or one arm, you should make sure that the shutting down of one arm will not affect the demand of the other arms. You get it? So that is what we have to basically make sure we understand. Of course, also companies may also choose to do maybe temporary shutdowns, maybe for some time, until maybe when the market restores, or until when maybe they have maybe a cheaper source of raw materials and so on. You get it? Yeah. So ideally, when we are looking at shutting down a given division, like I said, we don't only look at the profit from that arm, we also have to look at the impact on the overall profit. And why we look at the impact of the overall profit is because shutting down that arm might bring up about some fixed costs that will not be covered. Maybe because this arm has been paying part of the CEO's salary, this arm has been paying part of the rent for the head office. So once this arm is let go, it means that there will be an element of some fixed costs that will not be covered. And these fixed costs have to be covered by the existing entities. So it's very important for us to understand that. Of course, we also have, of course, like I said, we have other factors that we should really look at, especially when we are making this decision. Of course, one is the investment in training of company employees, which would be lost in the event of a temporary shutdown. Yeah, of course, you might have, let's say, maybe you have to train your labor to be able to start producing another kind of product. So they require some kind of training. And then, of course, you also maybe don't want to lose some kind of labor. You might also go ahead to incur some costs in paying salaries during a redundant time as well. Of course, there are also things to do with motivation. Some people, because they are idle, they are not doing anything, they will lose motivation. I think just like the way we're in the lockdown right now, people are losing motivation because of the current situation. So it's important for that. And then, of course, loss of already established markets. Now, if you're making a decision to shut down temporarily, your question is, will a competitor not jump in and be able to take my market? And you know what happens with customers, once they have moved on, they have moved on. And to pull them back to your products, then you need to put in an extra effort or an extra cost. You get it? And of course, obsolescence of the plant. This is also very very key. Of course, we need to make sure that we are looking at this plant. If we are doing a temporary maybe shutdown, will this plant still remain as relevant? Will it be able to cope up with the market? You know, market changes. The market changes over and over time. Maybe you're dealing in an analog kind of production, and now we have the digital. So all those factors have to be looked at when the company is making a decision on either to stop production or stop temporarily and so on. You get it, huh? So it's pretty very important. Now, when we come to our example here, they're saying that a company produces 3 products with the following profit information. Now, product A, the sales are 32,000, and then we have 36,000 in costs, and then 4,000 in loss. Product B, we have 50,000 in revenue, we have 38,000 in cost, then we have 12,000. Product C, we have 45,000, we have 34,000, we have 11,000 in profit. This product, we have 127,000, we have 108,000, then we have 19,000. Now, they are saying the total cost comprises of 2/3 variable and 1/3 fixed. The directors are considering dropping product X because it's a loss. Evaluate their decision, and they're asking you what other factors should be considered. Now, when you look at this question, you'll definitely want to advise management to drop product A. Why? Because they are making a loss, and that's why they are also considering the same. But yours is to ask, what if, because our current total profit is 19,000. So the notes here are telling us that before we drop or either maybe make a decision to continue, we should make sure that we are looking at the overall profitability. Remember, you're saying before shutdown, you have to make sure that you look at that decision and its impact on the overall profit. So when we get down, ours is to look at 19,000 is what we have currently before we drop. So once we drop, what will be the profit? Once we drop, what will be the profit? They have also gone ahead to give you, of course, the total costs comprised of 2/3 variable and 1/3 are fixed. So we can try to get this into our question, our Excel, or do a solution for this. Okay. So we have product A, B, and C. Product A. Product B. So we redraw the profit statement. We are trying to redraw the profit statement. So we have 32, 50, and 45. I have 32, 50, and 45. Sorry. And then we have total or overall. So the overall revenue currently is this. So that is what we have. Now, instead of copying that, now, since they are considering to drop product A, I'm going to drop product A. So my revenue will now stand at that. So now I'm going into costs. Now, because we are dropping the product, it's important for you to break down the costs. You get it? Because once you drop one of the products, that product will only go with its variable costs, but you will definitely remain with the fixed costs. So we have variable costs. Then we have fixed costs. I thought we had this handout. Okay, somebody says they don't have this handout. It's okay. Let me try to. Okay, somebody has offered to share it here. Thank you, Barbara. I hope this helps. I think I'd shared this earlier on. Okay. Thank you so much for sharing, Barbara. So you must be having it right now. So I was saying that when you look at this question, here when currently they just gave us total costs, but then here they are telling us that the total cost comprises of 2/3 variable and 1/3 fixed. So ours, since we are dropping off one product, we have to break down these costs into these. It's very important for us to do that. So it is 2/3. This is 2/3. Okay. Let me just try to write these costs here. So we have 36, 38, and 34. 36, 38, and 34. 36, 38, and 34. So these are the costs that I do have. You get it, huh? Now, good for you to, we are now going to basically share these costs. Now, for you, since this is your working, you can go ahead to, of course, have this written somewhere. You don't have to bring it here. You get it, huh? Because we are now going to break down this. So they told us that, of course, this is 1/3. 1/3, 2/3, sorry, 2/3 times 36, which is that. Then this should be the same thing. I'm just going to do like this. Sorry. So this is 2/3 of 38, and this is 2/3 of 340. Then if I'm to do 1/3, I'll get 12,000 there. At 1/3 of 38,000 is 1/3 of 38,000 is that. Then this one, 1/3 of 30. This is 340. This should be 34,000. Sorry. Okay, so this is what you have. Yeah, I could even reduce this. So that is what we have basically. So what we are saying is that once we drop off, remember this is a profit statement after. This is a profit statement after. Now, once we drop off A, it means that A will only go with the 24,000, but 12,000 will remain. Now, this fixed cost could be, like, say, the cost of maybe the cost that this arm has been paying for rent, for the CEO's salary, and so on. Now, these costs are presumed to continue to be incurred. And that is why, in this case, we don't do what? We don't exclude them. You understand? So it is only this that will go. You get it? So you can work this from a side and only bring the 12,000. Just did it to demonstrate to you here. So if I'm to get the total, so that is what we have. So if I got on to get my profit, or loss, of course, this will be negative 12,000 because it has no revenue. We have dropped off the product, and it also has no variable cost, but it still has the other cost. And then this, sorry, let me just try to say total cost. Let's get the total here so it can. So these are total costs. So it's from the total, it's from the sales minus the sales figure minus our total costs. It ends up giving us total of this. Now, I think you can see that our total profit or loss previously, was 19,000. But once we drop off one product, once we ahead and dropped off one of the products, we've had to lose the revenue. We've also gone ahead to lose the variable cost. You get it? And that has affected us because we've remained with a fixed cost. Now, when you remain with a fixed cost, you're seeing that our overall profit is actually reducing. You get it? So the difference between the earlier profit, the 19,000 and 11,000, basically the difference between them is lost contribution. Is basically lost contribution from product A. And the reason why we call it lost contribution, remember, we say that contribution is also equal to revenue less variable costs. So our revenue for product A earlier on was 32,000. It was 32,000. Now, when you subtract from 32,000 and subtract the 2 over 3, times the cost that we had here, which is 36,000, the overall cost gets you to 24. When you get that minus that, you actually come to 8,000. So that is why we are saying your conclusion should be management should not discontinue product A because it will have a lost contribution of 8,000 from this product. It will have a lost contribution of 8,000 from this product. You get it, eh? So that should be something for you to consider. Now, the question also went ahead to say, what other factors what other factors needs to be considered? What other factors needs to be considered? Now, other factors that need to be considered should be what you should be looking at is what is this product A to the overall market. You understand? Because one of the things, product A's profit or loss might be the way it is because of the current situation, like I indicated already. You get it, huh? Like I indicated already. So since we are saying it's already covering up part of our fixed costs, what we should basically look at is the potential for growth. Can we still be able to, of course, grow the market for this product? Now, there are products definitely that even if you remain with it, it will continue to decline, that even the current contribution will also get down. Maybe because the product is totally out of the market, like if you're dealing in desktop computers, which are for the other mode that was analog, not the flat screens, then you know that you're destined for doom. You get it. So management also has to look at the product, the nature of the product, and the current trends in the demand for that product. You get it? Yeah. And then, of course, also one of the other thing, we're saying that if the elimination of product A necessitates the reduction of fixed costs, then it might be worthwhile to drop product A. Now, if at all the current fixed costs, that we saw that are remaining, this 12,000, reduce with the elimination of product A, then we may consider, to the extent of the impact on the overall profit, then we may consider to continue to drop product A. You get it? Huh? Yeah. So when it comes to other factors, this should be basically real life. Think about if you are the one who is dealing this. Do you just make a decision to drop product A, or you would actually look into other factors? Product A could be the Coca-Cola of essentially bottling company. And you know what this means? Coca-Cola is what helps to sell the rest of the products. So such a company cannot drop product the Coca-Cola product, because that is its name. It's the one that gives. Even if Fanta is doing very well, and maybe Mountain Dew is not Mountain Dew. Mountain Dew is not for that brand. But if it's another product is doing well, then they may intentionally continue producing product A. You get it? Huh? Yeah. So very, very good for us to have that in mind. So basically, you'd make the conclusion like I earlier stated. So the other that we are looking at as well is the sell or process further. Sell or process further. Now in Uganda, we've seen this especially with farmers, where, for example, you're producing, maybe you have a farm of mangoes, maybe you have a farm of oranges, and you're wondering whether you should sell the raw oranges or you should actually process further. You get it? Huh? If you could be also dealing like fish, and you would want to see if you need to improve the fish, whatever you're dealing with. So the decision on either to improve, process further, or sell as is also one of the short-term decisions that, of course, organizations may go through as, of course, as they're trying to do what, as they're trying to see if it makes sense for them. Now, the principle for either to sell or process further is one. You have to look at, if you process further, what is the incremental revenue? If you process further, what will be the incremental revenue that will come in to that product? And then the other, by incremental revenue, means what's the additional revenue on the existing maybe revenue that you're getting from, let's say, unit product. And then you also look at the incremental cost. What is the incremental cost that you're going to incur to process this product further? Now, if the incremental revenue outweighs the incremental costs, then it is advisable that you go ahead to process further, because it means you're going to make more money by processing further. But if it is otherwise, then you may want to do what? You may have to consider for you to sell as is, unless there are other factors that might come in. It could be a regulation, by the way. You get it. You know, when we are speaking about decision making, we don't only want to restrict ourselves on kind of, should I call them real, but on we want to make sure that we are taking things practically as they can happen in the market. You get it? In case there's a regulation, definitely you would have to process further. You understand? And then, of course, saying farm may produce intermediate products which may require further processing in order to the final product for consumption to the end users. So we have to make sure that any decisions that has to be made, whether farm can sell intermediate products to other farms for them to complete the processing or incur further processing costs in order to boost their sales. So I think we have to make sure that we are looking at this in depth. But for us to, in summary, for you to basically know, is that this should be your guiding factor. This should be, the decision should be based on your revenue, incremental revenue, versus the incremental costs. You get it, huh? Yeah, so very important. And then we have what we call the sales mix, where there's a limiting factor. Now, earlier on, we said that this limiting factor can be labor, it can be a raw material. I gave you an example of a person who is dealing in jewelry, where they have a limiting factor of a given kilos of gold or another material, maybe diamond, in a given period of time. And you see this diamond has to be used on necklaces, has to be used on watches, has to be used on, let's say, maybe bangles and so on. So the question is, based on the demand we have, which product should be able to be produced more? You get it? When somebody says sales mix, you're basically trying to look at the combination of your products. How many products within your sales mix should you sell? You get it? Should you sell 50 bangles and sell maybe 2 washes? Should you sell maybe, so depending on that, then you make a decision on what exactly basically to do. Of course, the principle, especially when it comes to limiting factor, is we try to look at, we're trying to look at how much, of course, are we getting from a given product vis-a-vis the limiting factor that is used for that product. You get it? How much are we basically getting from a product vis-a-vis the limiting factor that we actually using in production of that product? You get it? So it's very important for us to have that in mind. And also, one of the things we have to do, of course, we have to make sure that we produce that product that gives us the maximum return per limiting factor that is used. So if we are using gold to produce watches, we shall look at how much do we get from watches and how much revenue. Okay, how much revenue do we get from watches, and what quantity of gold and what cost does it cost us to buy that kind of gold? You get it, huh? So once we have done that, we'll go ahead to rank these products. And of course, like we said, one that has a higher return, then that product will be produced and will be of higher quantity in the sales mix based on the other. You get it? So we're going to see how the example is for us to know. These are just examples of limiting factors. It's just like your time. Your time is a limiting factor. You cannot attend an MDC class and be attending to your family, because you have to concentrate. So you have to look for what is giving you maximum return. So the same thing that also comes with organizations as well. So it's also good for us to note, as we're going to try out the question, is that where there's only one limiting factor, we use the contribution approach. Now, there are situations where you have more than one limiting factor. You get it? Now, I'll give you an example. For you to attend MDC, yours could be a limit of time and maybe money. You get it? Huh? The same thing with organizations. You know, you might be limited with the gold, but you also might be limited with a given staff who has a key skill, and that staff cannot be put on production, on a production of certain quantities. Like, they can only support production up to a certain extent. You get it? So it's very important for us to know that. Now, they are saying where we have two limiting factors, then we bring in the linear programming approach. I think this is where linear programming is a topic on its own that we shall be looking at, but this is where linear programming comes in. Of course, it will just be able to help us to get the best combination of products, of maybe the best combination of a limiting factor that gives us a maximum revenue. You get it, huh? And then they're saying where we have more than one limiting factor, of course, we use the simplex W. Those that did quantitative techniques, you know very well that when we have more than one unknown in an equation, more than two, maybe there are three, then we go ahead to use the simplex W, maybe X, Y, and Z. You get it? So if X, Y, and Z are our limiting factors, maybe equipment, materials, and labor are our limiting factors, and we want to get the optimal use of each of them, then we go ahead to use the simplex W method. We shall see how that is done. You get it? Huh? Now, this has some steps on it. These steps are for you just basically to make sure that you remember. Now, one, they're telling us that we identify the limiting factor. So like raw materials, like labor, like maybe machine space, and so on. And then we determine the contribution per product. And that's it. We determine the contribution. Contribution is unit price minus the variable cost. Then the other is determine the contribution per limiting factor. And they're saying this gives us the measure of profitability for a unit of a limiting factor. And they're giving us how this is calculated. So the contribution per unit is equal to the unit contribution which we've just gotten up, okay, divided by the units, divided by the units of the scarce resource to make the complete unit. We are going to see when we try out the question. And then after that, we rank the products by contribution, by limiting factor, by assigning 1 to the product with the highest contribution per limiting factor, in that order. Then we allocate scarce resources to the product as follows. By our ranking, where the first product with the highest contribution per limiting factor, of course, will take priority, and then we shall continue like that. Okay. Then they're saying if there's a balance of scarce resources, we allocate them to the next product, and so on and so on. Okay. Now we also have, of course, limitations of the limiting factor. Let's first try to look at the solution before we can come and criticize. Okay, make sure that you have your book and you're taking good notes of all this that we are doing. So we have this table, just trying to arrange it a little for you to basically understand. So you can write this in your book, or just correct. I think it's good for you to write it. Just rewrite the table so that it is easier for you to follow. Okay, apologies. I was trying to align this, but we can try to follow through. At least we are trying to get how, tables sometimes disturb in Word, but we should be able to go through this. So one, we have this is our sales, and then these are this is what we have as a variable costs. I think you can see the 6 plus 6 is what gives you 12. The 4 plus 18 is what gives you the 22. The 10 plus 14 plus 10 is what gives you 24. And then this 22 is supposed to be up here. It's just disturbing me a little, but should be there. Okay, the 10 is being added to 10 to get to a 22 there. And then we have the contribution. We have the contribution. Remember, contribution is revenue minus variable costs. So that is what we are having. So it is 20 minus 12. And then this is 30 minus 22 to give you 8. And then this is 40 minus 24 to give you 16. And then this is 36 minus 22 to give you that. Now we also have, of course, resources per unit. We have the resources per unit. Now just know that this belongs to W. This belongs to, sorry. This belongs to X. This belongs to Y. That belongs to Z, like that. And then we also have maximum demand. Now, maximum demand is of course what is the market is demanding. So we have 5,000 throughout for each of them. Have 5,000 throughout. Okay. So they're saying based on the above data, which is the most appropriate mix under the following. So we are first looking at this where labor is limited to 50,000 in a period. Where labor is limited to 50,000 in a period. Now, ours is to go back and see. Remember what they said, our steps? They said, identify the limiting factor. So we've understood, we've identified our limiting factor by the question. Our limiting factor is labor. And then they are saying determine the contribution per product. Now, our contribution per product has already been computed in the question. And these are the contributions we are seeing. You get it, huh? So that is what we have. And then they're asking us that determine the contribution per limiting factor. Determine the contribution per limiting factor. And they have gone ahead to even give us the formula for this. The formula for this is the contribution, the unit contribution, which is this unit selling price minus variable cost, divided by the units of the scarce resource that is used to make one single unit. So what you do, we shall go to our Excel. So we have W, X, Y, and Z. Those are our products. So the first step asks us to get the contribution per unit. Contribution per unit, which we had 8, 16, I think 14. That is our contribution as we have written. Sorry, it's So I wrote it wrongly. So the contribution is 12, 22. Okay, it's 8, 8, 16, 14. Yes, that's what we have. So what I'm saying is the next that they told us here in our step is to determine the contribution per limiting factor. So we are going to put the limiting factor and then get what? Our so the limiting factor, in this case, we are first starting with labor. So we are going to record the unit costs for labor in each of what we are producing. So we have 3, 2, 7, and 5. 3, 2, 7, and 5. 3, 2, 7, and 5. So we have to get our contribution per labor. Okay, contribution per unit per labor. So which is, they are saying it is this divided by that. Just going to do this. Maybe it would increase. So that is what I have. I'm putting it to decimal places, which is pretty good for yourself as well in the exam. So this is step 2 that we are at. So ours is to go back and see what step 3 tells us. Sorry. We are down here. Okay, step 3 says rank the product by the contribution per limiting factor, assigning 1 to the product with the highest contribution per limiting factor. So what that means, we shall have a ranking. So this will be number 1. This will be number 2. This will definitely be number 3. And this one will be our number last, number 4. Like that. So if it means that we are looking at the next step is saying, after we've done that, they're saying allocate the scarce resources to the product as follows. First, allocate it to the product with the highest contribution, and then if there's a balance, allocate it to the product ranking number 2, and so on. Now ours is to go back and see what is the quantity of labor do we have. Sorry. So they are telling us that labor is limited to 50,000 units in a period. Labor is limited to 50,000 units in a period. And then we have maximum demand for each of the units to be at 5,000. So we have, what we have to know is, let's just do current demand is 5,000 here up to here. So now the labor that is needed, the labor needed in total is 5,000 times the labor per, times this. The 5,000, which is the total quantity that is to be sold, times the labor per unit, which they gave us 3 hours for W2 for like that. So I'm going to get, okay. So this is what we have. So W requires 15,000 of labor, X requires 10,000 of labor, Y requires 35,000 of labor, and Z requires 25,000 of labor. Now, remember, the labor that is available is only 50,000 in total. But when you add this, the total of all this is 85, and that's why it is a limiting factor. So the steps are telling us that the one that you've ranked number 1, X, should first get what? It should be the one that we should give first priority. So allocate the scarce resources first onto the product that had, so this one will get 10,000. You get it. This one will get 10,000. So this is, we can say these are units to be produced. Remember, the question is asking us the appropriate mix under the following assumptions. So units now, for X, since we are allocating all the 10,000 labor that it needs, we are going to produce the overall, we are going to meet the overall demand, which is the 5,000. We are going to produce 5,000 units to meet the overall demand. And then we move to the second one was, now as you allocate the 10,000, then you reduce it from the 50,000. So we've remained with now 40,000. Now, the next one was number 2, was Z. So Z requires 25,000. So we shall still pick 25,000. Now, of the 50,000, we've already used 35,000, meaning we've remained with 15,000 that has to be allocated to the next. Now, the third requires 15,000. You get it. The third requires 15,000, as you can see there. Now, this would mean that the fourth, which is Y, is actually left out. So this we shall also produce 5,000 units. This, since also it also got, we shall also produce 1,000 units. And this we shall produce 0, because already the scarce resource has been utilized to the extent of 50,000. So in that case, the mix will be 5,000 of W, 5,000 of X, and then 5,000 of Z. So that is how you'd advise management on the mix. You get it, huh? So that is what you basically do. Now, if you want to basically, of course, replicate this For example, for the next one, which is which are materials, we are going to see how that happens. So for myself, I'm just going to copy this table. So I'm going to do like this. So my limiting factor here will now be is materials. The limiting factor is materials. And then the materials they have given us in the question, I could write the quantity. Remember, we are going to, after we've written the total materials, then we shall go ahead to get the contribution per each material. So we have 6, 18, 10, and 12. 6, 18, 10, and 12. 18, 10, and 12. So when you get the contribution per unit per material, which is our second step, it gives you this divided by this. Remember, the contribution remains the same. So this is what we get, as you can see. When it comes to ranking, we'll see that this one is number 1. No, this is number 1, sorry. This is number 2. And this is number 3, like that. So once we have that ranking, so it means that this will be number 4, like that. So ours is also to find about current demand. Current demand also is still the same, no matter what unit limiting factor we are looking at, it's still the same. So the materials needed, remember we've already ranked. So the next step is to allocate based on the ranking. So the materials needed from our question, maybe just to look at our question, the materials that are available is 110. The materials available is 110, but also for us to understand, just from our question, allow me look at this. So this arranged thing, you can see that we have 6, 18, 10, and 12. Now this is per unit. This is per unit. Now, if you want to get the total materials that are needed for W, it will be this per unit times the demand. You get it? Huh? So what we are going to basically do in our question here is we are going to look at the materials that are needed for each of the product will be this multiplied by this. So these are the materials that are needed for each of these. And as you can see, the total of these materials that are needed is 230. Yet our question says that they only have 110. You get it, huh? So that is the limiting factor in there. So what we are going to do, materials are available. I'll also change this. Now for you who is doing a written exam, you definitely have to rewrite this manually. So we have 110. We have 110 that are available. So we are going to now allocate the 110 based on the ranking that we earlier made. So it means that we shall go ahead to produce, these are not named. Let me just try to name them. So the first one is W in order, alphabet order. So now I'm going to go ahead to of course divide the 110 that is available. Definitely Y will get 50,000 in whole because it's our first priority. And what will happen is the next one is this, which will get the 30. Now we already have 80 used. Then we shall go to number 3. Number 3 needs 60,000. Number 3 needs 60,000. Okay, but remember we have what? We have 110 in total. We have 110 in total. So it means that we cannot even produce number 3 in the whole. So we have to produce part of it. You get it, huh? We have produced part of it. Now, let's first see. After we've given to W and Z, of the 110, we've consumed 80,000, which gets us to 30,000. So it is 30,000 that is available. And remember, we needed 60,000. So 30,000 is basically, we have a half. We have basically a half of this. Now, of course, the units to be produced definitely for us on W. For W, you can even compute this. Since W we are producing in whole, we shall produce the whole 5,000. Alternatively, you can even do 30 divide by the limiting factor, which is 6. So you produce 5,000. And then for Z will be 0. So it means that this will be definitely 0. X, sorry, we didn't give anything to X because of we couldn't even get here to the ranking to give anything to X. So, and then when it comes to X, Y we are basically Y was now our number 1. So basically we shall also produce the whole 5,000 units. Now when it comes to Z, since we only have 30,000 materials that are being allocated, and each unit requires 12, what we shall just do to find the number of units that we shall produce will be 30 divided by 12, which will give us 2,500, which will give us 2,500. So for us, we should say management should produce, if materials are limited to 110, management should produce, of course, W in whole, the whole 5,000 units, should produce Y the whole 1,000 units. Z should only produce 2,500, and then X, we should have nil. For X, we should have nil. So basically, that is how we would follow through our step to be able to respond to this question. So in case you have any comment, any question, you can drop that in the chat, or if you're watching a replay of this, you can do a comment section as well, or you can post the question later on the WhatsApp group. So I hope with these 2 examples, you're able to get. We will try out when the materials are what? When the limiting factor is more than 1, when we are looking at linear programming. You get it? Which we shall do as a topic on its own. And then within there, we shall also do the simplex as well, for us to understand. But I hope you've been able to understand how we do each of these. I encourage you, there are several questions that you'll find around this topic. So make sure that you look out for past papers to be able to try out and make sure that you understand everything that is there. We will have we'll look at that. We'll look at past paper questions. What I just wanted to make sure we prioritize, because examination questions sometimes encompass more than one topic. So when you start on them, when you've not covered very much, you'll be a bit disturbed. So that's why we are first covering some substantial topics, then we can start looking at past paper questions. Yeah. So want us to build on that something else. Just a moment, so I can share something. Okay, so given the time, I would love to run through this topic. Basically, it's one of the topics, but it's theoretical in nature. So you can be able to basically actually even understand these concepts once you have these notes. I'll share these notes with you so you can be able to. Now, earlier on, we said, you know, this paper itself is management, decision, and control as a paper. So control is a key factor when it comes to MDC. You get it? Control is a key factor when it comes to MDC. So basically, control is we are trying to make sure that our planned actions match our actual results. Our plans match our actual results. So basically, if it's for a farm, we are trying to make sure that if it has budgeted or if it has planned to achieve certain kind of things, it actually achieves. Now, for you to achieve what you've planned as an individual or as a company, you have to put some kind of control. You get it? And that's why you see, if you're driving on a road, if you want to move from one destination to the other, you have to control the vehicle. You get it? I think even in personal life, we have what we call birth controls, where you have to control yourself to make sure that you have the right kits at the right time. So that's where control comes in. So we have different ways that organizations deploy elements of control. Now, we have two things. We have what we call control. We have what we call control, and then we have what we call controls. Yes, one could be a pro of the other, but one in this perspective is a process. And one here, of course, the controls here are like systems. You get it? Are like systems in nature. It's basically what exactly what exactly you put to make sure that you're achieving. The controls is the result, the end result of the control process. You get it? So control it's a process of ensuring, but now it is the controls that you put in place to make sure that you actually attain control. You get it? So it's very important for us to understand how we differentiate those. Now, we have control at different kind of levels. Now we remember we looked at different organization level, maybe operational, tactical, and then strategic management. So we have different controls at that level, and also depending on what we are doing. Just like we have plans at different kind of levels, we also have, in the same way, we have different control mechanisms for each of the levels. So it's important for us to have that in mind. That a control at strategic level, of course, strategic level, we say that that's the level that is looking at the external market. They're trying to look at plans like to expand to new markets, new products, new industries, and so on. You get it. So the control measures in there should basically be related to that area. And then, of course, we have controls on the day-to-day basis that are basically for operational level. Now, their controls will be like, for example, logins, where somebody to access the premise, they have to use a login. Maybe they have to register. That is to maybe control. It's a control to make sure that workers are performing as they should perform. You could have maybe weekly evaluations. You get it, and so on. And then, of course, at management level, definitely those would also be depending on the interest of management. Those would definitely be different from what is at operational level. So based on the focus at a different level, you'll find that they will have different control systems. Now, we have control types of controls. We have what we call action. We have what we call action. We have what we call personnel, culture, and social control. And then lastly, we have what we call the results or output control. The results or output control. Now, action or behavioral control, for it, it's basically what we are doing here is, I'll give you an example. If, for example, we want to achieve maximum maybe customer service, maybe we want to make sure that we are effective in our customer service in the bank, then we shall deploy maybe supervisors that will make sure that they are seeing exactly what is going on by observation. You get it? So it's basically about how the staff are operating. So in case where there's any defect, maybe a customer has not been handled well, then this can be seen as and when it is actually happening, and therefore it can be handled. Now, before I look at more of disadvantages and advantages, I would just want to say something on personnel or culture control. Now, with the personnel or culture control, here you don't have to hire a supervisor to keep looking at what is exactly happening. With the personnel or culture controls, here you set up controls in a way that you develop a culture of doing things right, even without no one observing. You get it? I think you've been in organizations where coming late is tracked by, let's say, a login or registering in a book. But then, of course, people that have thought through this have said that when it comes to action or behavior, it has its own disadvantages. Because one of the disadvantages, of course, it's costly because you require an extra cost to put in a given control. But then also one of the other things that is demotivating, because imagine you come to work and the kind of control measure they have with you is how long are you spending at work. Basically, your value is being measured by how many hours you're sitting on your desk. You get it? Yet with culture, ours is to develop a culture of hard work and ensure that every staff embraces this and deploys it. So whether we supervise you or not, you actually delivering the results. You get it? So that is what happens. Then for result control or output controls, here we don't either deploy the observation or action and so on. We are not saying we are developing culture, but we wait for the results. You get it? Just like if it's a bank and it has different branches, it may not have to have somebody to move around the branches to see everything is running very well. Theirs may be to wait for the end of the month and see how much revenue has been made from let's say from a given branch or a segment. I would also use an example of, let's say, for example, sales representatives. If they are sales representatives, for example, for a company like MTN, they can have monthly targets of how much MiFi is to sell. So if at the end of the month, instead of having a supervisor who has to go to the field to make sure these people are actually selling, they just put a contract and say, every month you should sell this to be able to earn a salary. Now, one of the disadvantages of the output or results is that they are likely to be manipulated. The results are likely to be manipulated because the staff knows that you measure them on the results. So if it's a profit for a branch, the manager for the branch can manipulate that profit and maybe push some costs in the next period. You get or not recognize some invoices at the end of the day. So it has good things. Of course, it is cheaper because you're not going to put in an extra cost to supervise somebody or do monitoring and evaluation. You're just waiting for the results. And then, of course, the other thing also is when you're doing a results-based, you're forgetting about the impact of whatever they are doing to generate that kind of revenue. A branch may be making higher revenues or higher profits because they're actually overcharging on a given product. You get it? Or maybe because they are giving discounts, they are selling below to increase the numbers, which is contrary to the way you operate. I think you've seen some people that are in sales because they look at commission, how much commission they are going to make vis-a-vis their target. Now, if they know that for me to actually earn maybe a salary, I need to sell 15 gadgets, and maybe they have sold only maybe, let's say, maybe 10 at a given point in time. Now, if each gadget is, let's say, 20,000, that means that maybe if they have sold 10, they have to sell more, let's say if each gadget, let's say, is maybe it's 20,000 and they have to sell maybe 15 and they have sold 10, it means that they have to sell worthy 100,000, the 20,000 times the 5 units that are remaining. Now, if somebody feels that they are going to miss a target, they may end up buying those units themselves because they know that even when they compare how much cost they are going to use to buy those units vis-a-vis the salary they would miss by not meeting the target, then they are going to lose out. So you'll find, especially when it comes to staff of such companies, they'll have a lot of stock of company stock at their premises because they have actually been doing that. Rather than selling these products, they go ahead to hold them and pay for the value so that they can meet their targets. So those are some of the things. So I just wanted to basically give a very short, precise description on each of these. So that is what happens with action and behavior. Basically, they're action oriented, and whatever is done is basically making sure that things are working as management wishes. So action is also, of course, we have behavior constraints, then we have pre-action reviews, then we have action accountability. You get it? Now with behavior, basically, of course, here we deter you from doing certain kind of things. So things like passwords, maybe key and lock, where only few people have certain keys. We can have, of course, where we say that maybe a given manager should not spend more than maybe 500,000. There could be ceilings. I think we've seen that, especially, for example, for petty cash. And then we also have what we call pre-action scrutiny. Pre-action scrutiny. This is where, of course, before you do anything, there needs to be a kind of approval. You get it? They are giving us an example here. For example, if you're to build a house somewhere, there should be actually an approval by, let's say, the municipal authorities before you can actually go ahead to build that house. So it's a pre-action. You get it? So it's a control measure to make sure that you're building the right buildings, but it's pre-action before you can actually go ahead to build. And then we have, of course, we have action accountability. And of course, right here, action accountability is basically where we have certain guidelines of the way we work. You get it? Eh? And an example of this could be where we established work rules and procedures. It's basically the do's and the don'ts. You get it? The do's and the don'ts. And of course, whoever does the don'ts, then of course they are subject to punishment. You get it? Eh? So that's what happens with action accountability. So then personnel culture. By the way, this personnel culture is the most commended one, because remember, here you're not doing observation, you're creating a culture of high performance. I think you've been to, for example, banks where they have a lot of, very good customer care, and there's no camera watching. It's just within them, they value the brand, they value treating customers well, and so on. You get it? Huh? So that is what happens with this. So we also have this broken down. Of course, personnel controls. Of course, this looks at you making sure that you recruit the right people at the start. When an employee is entering the organization, you're making sure that they have the right competencies. So that at the end of the day, when you recruit them, you don't have to see to make sure that you're seeing maybe someone doing the right thing, because you already know that you recruited them with the competence to do their work. So we have the personnel, and we have different ways, of course, we can achieve that, between selection and placement, training and job design, and so on. So all these are intended to make sure that these employees, it's a control measure, these employees understand their work. These employees are allocated to the work that matches their skills and competences, and so on. You get it? Huh? So we get down to break this down, as you can see. Then culture is what I've just been talking about, where you set a kind of culture that influences people's action. You get it? Huh? So you just say, for us, we are welcoming. You get to an organization and everyone is welcoming you, and so on. So it's a culture control. And then the results based that I just talked about, remember I said here, we basically set a result and say you should sell 5 units, you should make this profit, you should teach this number of people. You get it? Eh? And so on. I'll give you an example. For example, a service like ours here, our tutoring service. Somebody may ask, if we want to make sure that we have controls, what shall we basically do? We cannot have somebody to supervise every tutor when they are teaching, because that will be an extra cost. So what we are doing is we recruit tutors that we believe that have the right qualifications and experience to teach certain kind of papers. You get it? So that is how we create that kind of control. So they are saying results controls can be established in terms of course, establishing results. We can have establishing performance targets. We can have measuring performance. Then we can also have providing rewards and punishment. By providing rewards and punishment is you attach a reward on a given target. You say, if you hit this kind of profit, I think we've seen this with schools, where they say if you get first grades in your class to the tune of this, you get 1 million. If you get to the tune of this, you get 3 million, and so on like that. So that is a result-based control. You get it? Huh? Yeah. So we just get down to break this down, establishing results. This could be like return on investment, it could be profit, and so on. You get it? Huh? So you try to go through this and you'll be able to understand the concepts even much better. Then we have examples of rewards here. We have salary increases, promotions, and recognitions. All these are part of controls. All these are part of controls. When you put them in place, then you actually see performance conforming to your plan. You get it. Remember, control is making sure that we have planned to make 200 billion in a year, and we end up making the actual 200 billion in the year. You get it, huh? So it's important for us to have that. And of course, punishments as well. You demote somebody. If somebody fails to obtain, of course, the reward, they could also lose their jobs and so on. Okay, then I want to also speak about feedback and feed forward controls as we finish for this class. Now, feedback is you wait for the process to end and you get feedback. It's just like the way CPA does. CPA is a kind of feedback. That is control is like feedback. You study, no one is controlling you, either you're in class or not, either you're on your WhatsApp and so on. Then we wait to the end where we send you results, and that is your feedback. You get it? That is your feedback. The same thing with companies as well. With feedback, companies will wait for the performance to end, for the financial to end, and then they will look at what were the divisions, what exactly happened. You get it? What exactly happened, and then of course that will help them replicate this into the future, maybe in the next period. Now with feed forward, what we basically do is we make sure we look into the future. We pre-evaluate what might happen. You get it? We pre-evaluate. That's why it's called feed forward. It feeds into ahead. You don't have to wait for the period to end, but you pre-read what will exactly happen. You get it? And that's why you're saying feedback control here involves monitoring outputs achieved against desired output and taking whatever corrective action is necessary. But all this, you should have in mind that this analysis is made at the end. You get it? And then in feed forward, we are saying that we predetermine, and these are like, we do predictions. We basically do predictions of what might happen, and then we take corrective action. We basically start taking control before we can actually get to the desired output. Of course, in most cases, anyone would believe that feed forward is much better, because with it, you know very well that you cushion yourself onto any kind of deviations that might happen, because you're pre-thinking, you're predicting what will exactly happen at the end of the day. You get it, huh? Yeah. Because you don't want to wait for feedback. You know, feedback is bad. For example, right now you have to wait for the results to come back for you to know either you've passed the paper or not. By the time the results come back, you cannot change anything. But if you had a kind of control measure that you're trying to predict what might happen and taking corrective action, then you create a higher assurance and likelihood of actually achieving your objective or goal. You get it? So you understand that. Then we have this part of harmful side of controls. Now with harmful side of controls, we are saying, like the way we've seen some of the controls up, for example, action-based. I think we saw what happens with action-based. We are saying it creates a kind of motivation, loss of motivation. You get it? If people are doing things because cameras are seeing them, if they are doing things because there is a supervisor, if they are doing things because there are rules and regulations, you get it? Do's and don'ts. It's a way it motivates them. You get it? It demotivates them. So one of the harmful side side effects of controls is, of course, affecting employee behaviors. You get it, in the areas of course, motivation. And then we also have, of course, we have situations where this would lead to lack of goal congruency. Now, I give you an example here. Goal congruence means everyone is doing everyone is taking the right path in achieving the organizational objective. Everyone is in the line of achieving the organizational objective. For example, if the goal for the organization is to make sure that they maximize revenue, or maybe they have effective customer care skills and so on. Now, because they are those, for example, result-based, because they have set result-based controls, you'll find that everyone will be working towards achieving. They will to create a kind of independence where there is no kind of people working together towards achieving a given goal. Every branch, if it's a bank, every branch will be working towards achieving its kind of objective of, let's say, maximizing revenue. Now, as every branch is taking the independent move of achieving, maybe maximizing their revenue, in some way or the other, they may be diverting from some of the objectives. You get it? So they are maximizing revenue, but maybe they're having an impact on maybe customer care, which could be also one of the objectives of the company. You get it? So when they say lack of goal congruence, means the goal of the organization is much likely to be affected, because they create a kind of individualism within either individuals or maybe divisions or branches and so on. You get it? Yeah. So that is why they are saying results controls can lead to goal congruency. So you'll try to read more of this and you'll be able to understand. So there's the motivation, lack of goal congruency, and of course, controls may also, of course, bring about manipulation, as earlier indicated, because they are result-based. A manager will adjust a given value of revenue to make sure that they are meeting the targets. I already gave you an example of where staff will go ahead to hold some stock and pay for it so that they can meet their commission. Now, at the end of the day, that's not a good thing for the company, because the company thinks it's actually reaching out to customers, it's selling these products to customers, even when it's making its analysis says maybe that region is doing well, but when actually staff are getting the stock and selling it in another region. You get it? So that kind of manipulation is one of the harmful side effects of control. So when I speak of harmful side effects, just think about your organization and think about the controls they have in place, and think about what exactly has it affected. Of course, the other thing about results-based is that they also limit people that are high performers in nature, people that want to perform beyond the control. If the control says your limit is 20 million in revenue that you should bring in as a salesperson, somebody will only think about the 20 million. But if you create a culture where people know that they have to make sure that they maximize revenue, you'll be seeing people who are getting 40 million, 50 million, and so on. So very good for us to have that in mind. So here we just try to go through the advantages and disadvantages, of cultural controls. I think for now, you now understand personnel or cultural controls. So we have advantages here. Definitely say they have relatively few harmful side effects because it's within people. It's a culture that is created within people. You get it? Huh? Yeah, in small organizations, of course, where we cannot afford the costs, they're not very, of course, they're not very costly. And of course, one of the other things is that they're saying if personnel or cultural costs are not sufficient on their own, it will be necessary to supplement them with other form of controls as well. Okay, and now this is a disadvantage on its own. This is a disadvantage because it means that they can't work alone. Just wanted to correct this. Okay, we have action controls. We already understood. Once you know the type of control, then you can be able to provide this action control is basically supervision, cameras, passwords, and so on. Of course, we've already spoken about the harmful effects. These are the harmful effects. You get it. And then we also go down to results controls and so on. So we have the management control system that I think I think what we'll do is we will start from the management control systems. I'm going to share this other part that we just looked at for you to be able to go through and appreciate. Then we shall start from there as we look at the management control systems. So thank you so much, and it's already time. Let's start here from next time. I think I'll share I'll share the whole notes so that you can prior go through, so that next time we shall just run through. In case you're part of this and you're not yet on our paid program, make sure that you access that and you get the notes and the rest of things. So thank you so much, Samuel here. Yeah. So I wish you all the best, and let's continue the conversation on the WhatsApp group in case of any challenge. Also, let's make sure that we look out, to keep trying to sneak a little into the past papers and see if whatever we are studying really is out there. But of course, whatever is on the syllabus is definitely has potential to be examined. Yeah, so thanks so much. And unless we have any question, somebody asked for the Excel. I will try to share that, but I encourage you to really follow the revision class. The Excel might confuse you, and that's why I want you to follow the class and write. Actually, when I'm doing whatever I'm doing, as you follow, you have your book and you note. Whatever I'm doing in Excel, you should be able to do it also in your book. Or else, what you can do is after we've gone through this, you get the question and read it again by yourself. And where you have a challenge, you can go and revisit the video, and it can be able to help you. You get it? Huh? Yeah. So we're just trying to make this like a normal learning way, because we don't give out blackboards or the whiteboards to our students. So we expect them to be able to take the notes. But I'll share with you this one, but just for you to know that. So thank you so much. And otherwise, I wish you all the best. Bye-bye.